This might sting a little, but you know me. I'm not going to sugarcoat things for you. Another analyst I keep tabs on just went bearish. And wait, there's more. Another one is actually throwing around the idea that we could already be in a bear market as we speak. Here's the deal though. I track tons of chart analysts, like literally dozens of them, and the vast majority are still sitting there convinced we're riding a bull market. But I'm bringing you these opposing viewpoints anyway, even though both of us would probably rather pretend they don't exist. You know what I mean? My whole thing is this. I'd rather chase what's actually real, even when the truth isn't particularly fun or comfortable. So, full transparency here, I'm personally not sold on the bear market theory just yet. But let's dive into it together. You've probably seen everyone on social media freaking out about the Bitcoin death cross lately. So let me walk you through what that's all about. Real quick before we jump in though, and this is important, I don't have any financial background whatsoever. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. So here we are, November 15th, 2025. The markets, they're kind of just doing their own thing, bouncing around in place. Sure, you've got a little green popping up here and there, but honestly, it's not exactly fireworks material. XRP's hanging out at $2.23. Bitcoin's parked at $95,653. So yeah, we're basically in that awkward waiting room phase right now, just watching to see what unfolds next. Chart analyst Blunt just posted something, and this guy's got a serious following at 329,000 people. He's now leaning towards the idea that we might actually be in bear market territory. He's looking at this Bitcoin price chart and dropped this. Not really what anyone wanted to see, but that brief strength was an ABC up. Losing $100,000 is a pretty strong psychological level to lose. The high time frames are now starting to look dicey on Bitcoin. I think we need to start entertaining the idea that the cycle may be over. So yeah, another flip. And here's my promise to you. If more analysts I track start switching to the bear side, you're going to hear about it from me. Doesn't matter if it ruins my day or yours. Doesn't matter if I personally think they're off base. Speaking of which, that's exactly how I feel about this particular call. I'm just not convinced. I've got a laundry list of reasons why, and we'll keep unpacking those. But what matters most to me is that you get exposed to different viewpoints from analysts who actually know their stuff and have proven themselves over time. Then you get to be the judge. You're capable, you're sharp, you can sift through this and land on whatever conclusion feels right to you. As for me, I'm staying open and taking in everything I can find. If the day comes where the data pile gets heavy enough that I genuinely think, all right, the most likely scenario here is bear market, I'll come right on here and say exactly that. But that day hasn't arrived. Not by my assessment anyway. Okay, let me tell you about Frecky real quick. This guy's been around since 2011 in crypto. He jumped into the XRP world practically when it was born. And on top of that, he spent decades working in actual finance. So yeah, he knows what he's talking about. He drops this post today. Says, disbelief. Zooming out, this will be painful for most. This range is a nasty shakeout for emotions/sentiment. When I listen to retail, fear/greed, I believe it's well below 10. So what's he getting at? Well, you know that fear and greed index that runs from 0 to 100, 0 being absolute terror and 100 being full-blown greed? He's saying if you chat with everyday people, normal investors out there, you'd swear we're sitting under 10 right now. But watch this twist. When I speak with institutional, I would gauge their fear/greed realistically at 75 plus, which puts them way up in greed territory. Then he hits you with entirely two different worlds. That's right, the smart money versus the typical living retail speculator. Keep in mind, this isn't some random person speculating. He's in the finance trenches watching this stuff unfold daily, just offering his perspective. And he finishes with this. $100,000 is a large psychological resistance, just as I said it would be years ago. So sentiment is going to flip eventually. That's just how this works. And when it does, you're going to see retail emotions do a complete 180. The voices you're hearing right now, the really loud ones, that's peak volume right there. And guess what? The people making all that racket happen to have the biggest audiences on social media. Plot twist though, these same folks are actually the smallest players capital-wise on X. So you've got this interesting dynamic where the participants with the least skin in the game are creating the most commotion. Yeah, I can totally see that being accurate. A community member named Jimmy threw out an interesting question. He goes, hold on, when you're analyzing charts and looking back at historical patterns, doesn't the death cross mean something based on what we've seen in past cycles? Not trying to be bearish or anything, just genuinely curious which indicators people trust and why. Frecky chimed in with some thoughts on the death cross, basically saying it tends to show up at local bottoms and acts as a lagging indicator. The Bitcoin death cross did trigger, by the way. Does that automatically put us in bear market territory? Not even close. You had analysts everywhere jumping to that conclusion today. I want to give you the flip side of this because I can tell you with confidence that's not the full story. There's zero guarantee here. Pepezo, who does chart analysis, shared something that really stands out. He wrote, "We've seen this 3 times, death cross, then bottom, then new all-time high. Today we're only at death cross. Be ready." Look, the death cross has this terrifying label attached to it. Seriously, whoever came up with that branding knew what they were doing. But the big mix-up? Everyone hears death cross and immediately thinks, bear market is here. Want to know what actually happened? 3 separate occasions in barely over a year where this signal flashed. What came next each time? Price went ahead and smashed through to brand new all-time highs. Yeah, not exactly the catastrophe the name suggests. Credible Crypto spotted that post early this morning, hit the repost button, and then unpacked the entire situation with more context. According to him, this perfectly demonstrates why I pay little attention to moving average, MACD, or other lagging indicator crosses/closes, etc. The death cross gets its name because it's supposed to be a bearish trigger. It occurs when the 50-day moving average crosses below the 200-day moving average and is supposed to signal the start of a bear market/downtrend, hence the name death cross. Despite this, the last 3 death crosses on Bitcoin actually marked our local bottoms, all within 10 days or less of the cross and within 10% or less from our bottom. In every actual bear market, we eventually at some point get a bearish cross of the 50 and 200 DMAs as prices trend down. This is natural / to be expected when price is bleeding for a long enough period of time. But these crosses only take time into consideration. They do not account for price and market structure. And so a bearish moving average cross with no bearish shift in market structure is essentially just a false signal. The reality is that just because every bear market experiences a death cross doesn't mean that every death cross signals an impending bear market. Unfortunately, this false equivalency is often perpetuated by analysts who point to bullish or bearish crosses of lagging time-based indicators as arguments for bullish or bearish price action in the future. It just doesn't work that way. The same can be said for bullish or bearish closes above/below certain time-based MAs. Without taking key price levels and market structure shifts into consideration, it's all just unnecessary and often misleading noise. Exactly. Chart analyst Psychedelic was saying the exact same thing in his breakdown. I won't go through the entire post here because we'd be here all day, but he's basically echoing that same point. Feel free to pause and read through it yourself if you want the full details. Let me hit you with part of what he wrote, though. The whole point is that over the last 14 years, the death cross has signaled at least a local bottom with a following 45% minimum rally after. You're literally looking at the Bitcoin chart proving this point right now. What he's getting at is pretty straightforward. History has this habit of repeating patterns, or at least coming close. If past cycles are any guide, we shouldn't be sitting around forever waiting for confirmation that the bottom is in before things start heading back up. Chart analyst Crow threw in his perspective too. The death cross usually happens at the bottoms, and the bottom usually happens when everything looks like shit. No sugarcoating there. The Negentropic account caught wind of that and shared it. These are the brains behind Glassnode, that on-chain analytics platform. Full disclosure, I'm pretty obsessed with what Glassnode puts out. They dropped this gem, The night is darkest right before dawn. Wall Street will load up on cheap coins. Liquidity spigot about to open. That outlook? Yeah, I'm completely on board with it. Think about the liquidity situation for a second. We're staring down this enormous influx of capital, and people seriously believe it's just going to skip over risk-on assets entirely? Come on. The macro environment matters here. That's honestly the biggest factor keeping me from turning bearish at this stage. Look, if I end up being wrong, then I'm wrong. But right now, I'm just not buying it. This is just my personal take. I'm not some Wall Street finance guru or anything. Here's how I think people actually figure things out in real life. If you genuinely want to get to the truth, you examine the strongest arguments from both sides. Something's going to click. One perspective is just going to hit harder than the other. Right now, the bulls have me convinced. Their case makes way more sense to me, especially when you throw historical patterns into the mix. That's exactly why I keep mentioning this. Most of the analysts I pay attention to, we're talking nearly all of them, are still fully convinced we're in a bull market. Yeah, a few have flipped bearish recently, I'll admit that, and I'll keep pointing those out when they happen. But that's the minority view among the people I track. Alex Becker dropped a post that's worth paying attention to. This guy pulls serious weight in crypto analytics, sitting at 1.3 million followers. His take? It's not that I know the market will go up. It's that I know if it does, alts will almost immediately be 5 to 10 times what they are easily on the low end. There's plenty of reasons. 2026 could be the biggest year in crypto ever. You'll never see this risk to reward anywhere else. Take it or leave it. That framework just makes sense to me because sure, we might see further downside, but the potential upside compared to the risk, it's genuinely hard to find that ratio anywhere else. Somebody jumped in the comments calling him foolish, meant as a compliment though. Alex Becker clapped back with, I'm not anything. I just know I'll lose 50 to 60% if we keep going down, but I'll make 20x. If we go up, I'll take that fucking bet. That's basically where my head's at. And here's the thing. Even if this does turn into a full-blown bear market, there's always going to be another bull cycle eventually. I'm playing the long game here, so short-term volatility doesn't keep me up at night. Time does its thing whether I stress about it or not. Okay, so check this out. There's this post from Crypto Wizard that's actually pretty interesting. They're talking about total 3 denominated in Bitcoin. Now, total 3, just so we're clear, that's the top 125 coins by market cap, but it doesn't include Bitcoin and Ethereum. Those two are out of the equation here. So here's what they wrote. Is this normal under the hood? Something weird is happening. Fear is at new heights, yet total 3 when pitched against Bitcoin has broken its multi-month downtrend and is soaring upside with 9.9 million in sight. And folks, I gotta ask you something. Is that really what happens when you're heading into the depths of a scary bear market? Because honestly, I'm sitting here thinking, no. Like, I'm pretty sure the answer is no, right? There's another post, and this time it's from Gordon. He drops this line. Alt/BTC for your RSI downtrend is over. It's finally time. Now what's he looking at? Same thing, those top 125 coins by market cap priced against Bitcoin. The whole alts versus BTC situation. And Gordon's basically saying, yo, check it out. That RSI downtrend we've been watching? Yeah, it just ended. Kind of wild, right? Here's the thing though. You've got multiple analysts, completely separate people, all spotting virtually identical patterns at the same exact time. And look, when that happens, that's when my radar goes off. When different voices start singing the same tune without coordinating, that's usually telling you something real is brewing. So Crypto Insight UK just dropped their take on XRP, and they're saying, genuinely, can you argue with this XRP? I know people are emotional, but take a breath. He attached a screenshot from his newsletter with this breakdown. Looking to XRP, things get exciting. I know market sentiment is extremely low and I get it, but XRP isn't bearish. It's just not. We've held the range for over a year on top of previous 7-year resistance. During this period, we've seen the largest liquidation event in the history of crypto. FTX was the previous liquidation king with $2 billion being liquidated during lows of the market and marking next to the bottom of the bear market. October 10th was 10 times the size, liquidating $20 billion in positions. This is marked above by the wick. You can see we reclaimed our current range instantly, as all long positions were wiped out of the market. As I discussed, furthermore, during this time, the weekly RSI has reset all the way down to the same area. We saw the initiation of the move from 50 cents to $3.30, all while still holding this range. So that's the bullish case for XRP. And honestly, it matches what I'm hearing across the board. Like, nearly every single analyst I track is saying the same thing. Do with that what you will. I'm just calling it like I see it. But here's what gets me. XRP keeps flexing. It's not even subtle anymore. We've climbed to heights that would have seemed wild just over a year back. The charts don't lie on this one. All right, so Chart Analyst Galaxy dropped this one earlier today. It's an XRP/BTC chart, and he's saying XRP versus Bitcoin chart looks primed for a run. The strength during this market correction should not be ignored. Yeah, another bull in the arena here. This guy thinks we're heading way, way, way higher. Now here's what's wild. Watching XRP smash that new all-time high against the dollar was awesome, right? But check this out. We haven't seen XRP hit a new all-time high against Bitcoin since way back in 2017. So what's the deal? Is that just never going to happen? Because I'm sitting here thinking it's got to happen eventually, right? At some point in time, we're going to crack that all-time high. The best stuff still ahead of us. Check out this post from chart analyst Ali Martinez. TD flashes a buy signal on XRP contained at a possible weekend rebound. So what we're looking at here in the short term is something bullish popping up, right when analysts on those bigger time frames are already saying XRP looks ready to rip. You gotta love when it all lines up like that. All right, so I've got to show you this post from Charting Guy. Yeah, the same analyst I brought up earlier in the video. Listen to what he said. Expecting a very nice run for this period. Some stronger coins, i.e. XRP, have already bottomed for this current correction. Some might take until early mid-December to chop around and bottom out. Then, in late January, we reevaluate whether we're in a bear market or not. Now here's what's fascinating. Short term, he's bullish, right? But plot twist, even this guy is leaving room for the possibility that we could be staring down a bear market. He's just not ready to make that call without seeing more action on the charts first. So yeah, he's keeping his options open instead of going full doom and gloom. Then someone shows up in the comments saying, $5 XRP easy in 6 to 8 weeks. Charting Guy fires back with, wait for it, more like $8 to $10 territory. Here's what I'm getting at though. The man hasn't gone bearish on us. We're talking $8 in the next 10 weeks or so. Man, if that plays out, I'm going to be doing backflips. Seriously. That would make my entire month. So, chart analyst Tara just dropped a post sharing her thoughts on how XRP might move if Bitcoin keeps climbing. Pretty straightforward correlation she's drawing here. Her take? If Bitcoin hits around $130,000, she's expecting XRP to land at $7. Push Bitcoin up to $150,000, and she sees XRP reaching $9. Now, look, I know some of you are thinking that sounds way too conservative, and hey, maybe you're right about that. Maybe XRP shoots way higher than her targets. I'm not here making price predictions myself. I don't pretend to have a crystal ball or anything. But here's the thing. It's not crazy talk either. The folks out there speculating on 15, 20, 25, even $30 for XRP this cycle, that's not some wild fantasy. Will we actually see those numbers? I honestly don't know. Price prediction just isn't my thing, you know? But I've been around long enough to recognize that crypto absolutely delivers those massive moves sometimes. Meanwhile, Chart Nerd hasn't budged on his stance at all. He's sticking to his guns, insisting XRP hit $13 and then potentially as high as $27. The guy's been sharing tons of posts backing up this view. Greg Crypto just threw down a challenge that's stirring up the technical analysis crowd. He's basically calling people out, saying, XRP rejecting, facts. Why? Honest and sincere question. Why are so many TA analysts rejecting this wave count, especially wave 4? Wave 4 can absolutely be irregular or expanded corrective, and in this structure, We clearly need to close above wave B to launch the fifth impulsive wave. So why the denial? Why ignore a valid Elliott wave structure just because it doesn't fit the bias? I'm open to a critical feedback. If you disagree, then tell me why. His target still sitting pretty at $27.16 for this particular setup. He's not backing down, thinks his analysis holds water completely. Now listen, the vibe out there is pretty rough right now. I'm not going to sugarcoat it. Fear's running high, people are freaking out, but you know what? This is crypto being crypto. Nothing unusual about these emotional swings whatsoever. Just because your stomach's doing backflips doesn't mean we're headed for disaster. This space isn't disappearing tomorrow. You've been around crypto for any real length of time, you already know this pattern. Things stabilize. The foundation underneath XRP, stronger today than it's ever been historically. Price taking a dive doesn't equal game over or some death spiral to zero. Do with that what you will. My personal stance? Man, I'm genuinely pumped right now as someone holding XRP. Real talk though, I'm not a financial advisor whatsoever. Don't go making buy or sell decisions based on my commentary. Seriously, that would be spectacularly unwise on your part. All right, see you in the next video.